We just ask you to take your crystal ball out, what you think the future of finance looks like, but particularly with AP in mind, and what the AP roadmap may look like for this time of economic uncertainty ahead.
Sure. So I did do a little outside research before the webinar today. I did ask our CFO at Tipalti some of her thoughts on kind of going one level below on in 2023, what finance would need to start working on more, particularly leading into the future. I'll go through some of those really quickly because I thought that would be useful. The one was finance and capital structure. So understanding the runway to the next financial round for the next investment round. If it happens to be sooner rather than later, what are your options between debt and other forms of capital, and what are the metrics and the performance measurement that need to be exposed in order to get that investment at the right investment level. Helping the company get early reads on top line performance and making modeling around, okay, what happens if inflation goes up or down? What happens if interest rates change? How are we prepared to kind of weather those different storms? Tied to that is flexibility and nimbleness, making sure that both the business and the budget planning have sensitivities in there so that depending on your forecasting not going perfectly as planned, you know what your plan B and plan C is, so you can make those different adjustments in a relatively quick way, and you haven't overcommitted on some of those directional plans so that you have flexibility from that perspective. Absolutely automation to identify inefficiencies in the finance operation of the business and making sure that the business is moving forward fairly aggressively on that front. Instituting cost controls, absolutely, across a variety of different areas, but really helping the whole business control costs, and also that comes in line with the visibility of costs and spend as well. And then finally, the last one, which may or may not be relevant to all the folks, but there could present some merger and acquisition opportunities for various businesses. There could be some good purchase opportunities out there. That could be the reverse side as well. But those were some of the things she brought up. As it gets like a level deeper into accounts payable specifically, the survey that we ran, the research we ran with IOFL, did indicate that most companies are looking to automate their accounts payable function specifically. 58% were planned to automate accounts payable in the next 12 months. That was up pretty significantly, up from 41% last year. So a pretty massive increase there. And when you actually look at how many are already automating now, 33% are already automating. That's up from 20% last year. So when you add that together, 91% are either already automating or plan to do more automation in the future, which certainly the biggest group was at planning to automate at 58%. That's up from 61%. So pretty much a 50% increase in that. So that was, I think, a positive trend line from that perspective, but actually a bigger increase than I would have expected in a year. So the market certainly is moving towards addressing this. And it makes sense. When every survey, every research point, every association that publishes research, it always comes up as accounts payable as the most time-consuming function of finance. I think the difference is people are just looking at it in a much more holistic way than they used to. And they're realizing that if you don't address supplier management, you only address the invoice processing, you have a problem. If you address invoice processing, but you don't address approvers, that's a problem. If you address invoice processing, but you don't have a purchase requisition process, that's an issue. And definitely payments, particularly if you have high volumes or cross-border payments or challenges like that. You really have to look at the end-to-end aspect of AP to address it, not only for the short term, but for the long term. I think in terms of things that you'd expect, given everything we've talked about around a roadmap for accounts payable, certainly PO management, purchase requisition, and basic procurement processes are going to be important for every company to start putting into place. That goes for PO matching, of course, as well. Once you have your invoice processing addressed, payments, you're always going to want to streamline payments and make it synchronized with the rest of your processes. And so that, I think, will certainly not go away anytime soon. And I would expect that companies will even then start looking at the financial operation even more broadly over time. But I think some of these other extended parts of the finance operation that do interact and play with AP will also be important. Maybe not for 2023 as much, but as you go forward, I think directionally that trend toward having process talk to one another and be more and more streamlined will only probably continue going forward.